Hey, good afternoon, everyone. It's the top of the hour. We're going to get started here in a couple of minutes. We see a lot of people logging on still. So we're going to get started here in about a minute, minute and a half. My name is John Jiminot. I'm the Regional Vice President of Sales here at Angel Oak Mortgage Solutions. I want to thank everyone who's jumping on here. We'll get started here in about a minute. A lot of you are taking the time out of your busy schedule, so we really appreciate it. And hopefully we'll hopefully get you all the information that you need regarding our programs. So give us another minute. A lot of people still logging in. This is great. This is our 9th product webinar series that we've done, the 9th in a series of webinars we've done. So we really had a lot of positive feedback, and hopefully, we're going to help you guys grow your business throughout the rest of the year and beyond. So get started here in about another 30 seconds. Still people logging in. That's good. Strong. Over triple digits here. If I recognize any names on here. Very good. All right, guys, let's get started. My name is John Jiminot. I'm the Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We want to thank you for joining us. A lot of questions. Hopefully we'll answer a lot of questions for you today. So please use that question box. And if we don't answer all your questions, we will have your account executive reach out to you and get you answers to questions that weren't answered. Just want to make sure everyone is aware this is being recorded, and this will get sent out to you before end of day tomorrow. So without further ado, let's get started. This is going to be a deep dive into products here. We're not going to talk about Angel Oak and the 7 securitizations we've done since post-COVID. We're not going to talk about how we are the leader in the industry. We're not going to talk about any of that, although I just did. So, but it's going to be a deep dive into products. So I've got 2 subject matter experts with me here today. Chris Barker, please introduce yourself.
Hello, I'm Chris Barker. I've been with the company for about 5 years. I'm an account executive in South Carolina, where it is hot and steamy today. Glad to be here, and thank you guys for coming on.
Thank you, Chris. I've known Chris since he's been here, and I've been here 7 years. Randy, please introduce yourself.
Good afternoon, everyone. Randy Reese. I'm the area sales manager in the Midwest region. I've done subprime, non-prime, non-QM for probably since '93, so about 27, 28 years, and love Angel Oak.
Yeah. So again, this is being recorded, and it's very interactive. So we want to make sure we get all your questions answered, whether it's through our subject matter experts or through your local account executive. So please, 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 and submit your questions, and let's jump into it. So hopefully you can all see my screen. This is Angel Oak Mortgage Solutions website. Very clean, easy to use. We're going to go through we're going to go right into the products here. So you can see right here, we have our programs. We're also going to talk about some really great tools we have, not only just technology-wise, but we're also going to talk about great marketing tools. So Chris, get us started. Give us an overview of the bank statement program.
One thing I think our goal today with you guys is to, when this phone call's over, that you guys are all better loan officers, and if there's realtors on here, the same thing with you. And what this allows you to do is get outside the box. So our number 1 program is our bank statement program. Yep.
Chris, I am going to interrupt you here for 1 second.
Go ahead.
And it's my fault, Chris, so my apologies. So we're going to put up a poll here. My mistake. We're going to put up a poll here and ask the audience, how many of you have closed a bank statement loan in the last 12 months? We'll take about another 5 to 7 seconds here. So again, I apologize, Chris.
Oh, no worries.
So 3, we still have some votes coming in. A good portion of you have voted. Over 70% of you have voted. Okay, tallies are in. Great. So 74% of you on this call have not closed a bank statement loan in the last 12 months. Well, Chris is going to take you through that to help you close more business. So go ahead, Chris. Sorry about that.
Again, one of the greatest advantages of having Angel Oak in your corner is it allows you to differentiate. And what John just put up there was great in that I pair up with loan officers all over the place, and we do seminars with realtors. And one of the things I like to ask the realtors and loan officers in that room, I'll say, if you've ever done a VA loan, raise your hand. And, you know, everybody that's been in the business 2 months raises their hands. And then I say, well, the reason I'm bringing this up is if you're good at VA, you ought to be way better at bank statement loans. And here's why. There's actually more self-employed borrowers, people in the United States than there are veterans. And that's also a pent-up clientele. Since 2008, you know, stated loans went away, no-doc loans somewhat went away, and those self-employed guys have been sitting on the real estate sidelines for 10 years untapped. Another great thing about our bank statement loan is, and I joke around about this all the time too, and I say, if you want to go on the President's Club trip at your company, if you want to boost your volume, if you want to get some bigger loans, bigger paychecks, the best way to do it is go after that bank statement borrower. And here's why. I joke and say, you know, the affluent people don't work for the man. They are not getting a W-2. They are self-employed. They're affluent. They're bigger loan amounts, and they're highly intelligent, and they use the U.S. tax code to its fullest benefit, meaning these guys are writing off 30 to 60 grand a year. I've seen some write off 100,000, and this is how most of these bank statement loans get delivered to us. They'll say, hey, their tax returns didn't work. They were W-2ing themselves 130, but they wrote off 120, net income, you know, 10,000. Meanwhile, we look at their bank statements, and this program is so slick, and a lot of people get intimidated. But if you pair up with a good AE, you don't need to be intimidated because we'll hold your hand all the way through it. So here's how it works. You go onto our quick quote tool, and you input the scenario.
Hey, Chris,
it's got a rate. Yeah.
Chris, just we're gonna talk about quick quote, but just give us a high level view, and then we'll start answering. We've got a lot of questions coming in here, so give us a high level view of the bank statement program, and then we'll answer the half a dozen to a dozen questions we have coming in. Sorry.
All
Sorry
right.
about that.
So the bank statement loan, minimum loan amount, $150,000, maximum loan amount, $3 million. So anytime you run into a jumbo, think about Angel Oak for all those products because we get up pretty high on those loan amounts. You're looking for somebody who's been self-employed for 2 years. We have a personal bank statement or business bank statement program, whichever fits, and your account executive will run you through a couple of questions to pick the right one for your borrower. You can do 12 or 24 months of bank statements. A lot of people go, what's the difference? There's not much difference except about an eighth better on the rate if you provide 24 months of bank statements. And it's about that easy. How do you deliver those loans to us? You load them into our website there, and we have a bank statement review team. A lot of people go, well, can you send me over your calculator? And I'm like, no, you don't need to do that. We do that for you. But you would upload it into our website, and usually within 24 hours, we give back a really slick income determination that says, hey, your income is exactly $11,947.36. You can go back and plug that into your 1003. And now it's just like any other loan you've ever done. It's actually simpler because no tax returns, no 4506, no W-2, VOE, pay stubs, none of that.
Yeah, Chris, great. You know, so some of the questions coming in here, and I want to really emphasize what Chris said there. We have a bank statement review team that's going to calculate that income for you. That's huge, and that's done at the pre-qual stage. So that's what underwriting is going to use throughout the entire process. So that's really, really big. Randy, we've got a couple of questions coming in here. So it sounds like an easy question, but what's the difference between using personal bank statements and business bank statements? If you can elaborate on that, please.
Absolutely, yeah. So again, you have the choice to use the personal or the business. Really, the difference is how they're behaving as a business. So if they're using their personal statements as their actual business account, we will use an expense ratio off those statements like we will their business account. If they're using their personal statements and in addition they have the business accounts, we will let them use 100% of their personal deposits into the account minus extra large deposits or one-time PPP loan, tax return, return to JCPenney's, et cetera. So pricing is the exact same. As Chris said earlier, the difference between 12 and 24 months is about 0.125 or an eighth of the rate. Really, I think on these loans, 0.125 is not really too much to simplify the process and go 12 months. So back to John's piece, on the business side, we're always going to take an expense ratio on that. We're going to start out at 50% for 98% of your borrowers. And if their expense ratio is lower, we're going to ask you to verify that with a tax preparer, accountant, CPA, and we can go all the way down to 30% on that. So, but LTVs are the same, pricing is the same, process flow is the same. We're going to do an upfront calculation for you, and that doesn't change through the whole entire life of the loan. So once you have that income, you're locked in, and you know how much house they can afford.
Yep. So Chris, talk about, a lot of you talk about your self-employed borrowers and how they're savvy borrowers and they're the ones buying those, luxury homes. Talk about how the interest-only feature works on that. That's another question we got here. And everyone, just continue to put in these great questions. We want to make sure you walk away here feeling comfortable selling these programs and then talking about these programs, not only with your borrowers, but your referral sources. So Chris, talk about the interest-only feature.
Interest only is, especially on these bigger loans, the interest only has a huge benefit, and a lot of people seek that out for us. So we do allow interest only on these loans. It's actually a 40-year term. It's the first 10 years is interest only. Then after that, it becomes a 30-year regular amortizing loan. But it's a slick program.
So another question, Randy, what's the credit score required? Whew, sorry about that. What's the credit score required for a 90% LTV?
So it's a 700 score for 90% LTV, and that's pretty universal through our category of products, our offering of products.
And just so you know, that's a 90% LTV, one loan, no MI. So, everyone's expecting, rates, and we'll talk a little bit about rates as we get down the road here, but everyone's expecting, if you got a rate over 3%, that's crazy. But you have to take into consideration that these don't have mortgage insurance. So just remember that when you're working with your account executive and you're talking about rate and affordability for the borrower. Chris, got a question in here. How do we know how much of a loan the borrower can be pre-approved for? Well, Chris, kind of reiterate how we're calculating that income for them. So just to get Stephanie comfortable with how we will calculate and approve them with the pre-qual. And Chris, maybe touch on what our debt to income ratio is for this program.
Okay, easiest question first. Debt to income ratio is 40 front end, 50 back end. That's now I will say at 90%, you're looking at I think we tighten it up a little bit. It's 40-45 ratio if you're going for 90% LTV. A lot of times I'll have an LO call me and go, can you max the numbers out? Like, can you do the math for us? And it's absolutely, it's super easy. So as I said before, we get this beautiful income determination back. It tells you exactly what your monthly income is. You plug that into your 1003. We plug it into our system, and it automatically calculates the DTI. And from that point, your AE or you can just start tweaking that number up. Increase the loan amount, which will increase the LTV, slightly increases the rate, maybe increase the purchase price even more. Because a lot of times I'll see, and it's pleasantly surprising to get some of these income determinations back. You'll see some come in at $1 million a month, and you're like, "Holy moly, what does this guy do?" And you'll find them, trying to buy a $400,000 or $500,000 house. I mean, I saw one last week. The DTI was 2%. I'm like, we can crank that one up a little bit if you'd like to. So it's very easy.
Yeah, that's key. I think I really want to, again, hit on a point that Chris made here. how important is that for you to go back to your referral partner, your realtor, right, and say, hey, I'm going to increase this buyer's borrowing power by 2, 3, even 4 times. So your referral partner, your realtor, is going to be really excited about that. So it's a great point, Chris. Randy, great question here. What if a borrower has 2 separate businesses and 2 separate business bank statements?
Great. So yeah, good question. So if you have 2 separate businesses, 2 separate bank accounts, and providing that they're not cross-pollinating, so transferring from one account to the next, you can use both sets of statements. Again, we'll calculate that up front, and we'll be able to use both those statements. So.
Yeah, so Billy, hopefully that answers your questions, guys. Keep them coming in. Another great question here. And I can kind of answer this. So the question is, any exception on someone being, self-employed for maybe 18 months? We've gotten exceptions, and this is one thing I really want to drive home. Angel Oak, and I said I want to talk about Angel Oak, the company, but one of the great things about working with Angel Oak as your non-QM lender, we are a vertically integrated company, right? So what does that really mean to you? Well, that means we connect Main Street to Wall Street, and we know 30% of the loans that Randy and Chris and the rest of the AEs close, 30% of those loans don't meet our guidelines. So what does that mean? That means we close loans that don't meet our guidelines, that we know the appetite that our investors have. We don't have to go to someone else and say, you get it clear to close, and then you go into your final investor and say, do you like this loan? We're not going to lower the LTV. We're not going to say add 3 or 4 more conditions. So that's one of the things I wanted to get right off the bat. I'm working with Angel Oak. So a couple of questions coming in here. So I've gotten approvals. Let me get back to it. So I've gotten approvals where the person's been maybe 21, 22 months. Chris, Randy, I don't know if you guys have had examples like that also.
Absolutely. Yeah, the great thing about being a non-prime, non-QM company is really we're not looking at your traditional. You're not running findings on these. We're not following findings. It is our own programs. We manual underwrite everything, and if your loan makes sense, we're going to find a way to make that work if it makes sense. And I just want to add something earlier. For every loan amount you're doing, your average loan amount on our non-QM, and especially on our bank statement, every market our bank statement program is averaging about 20% more loan amount than our other programs. So, most of us are commission based, and the bigger the loan amount, the more commission you make. So, something to keep in mind.
Chris, talk about a personal bank statement that has 2 people listed on the bank statements, and even kind of go into a little bit. What if one of them's W-2, please?
That's a beauty. Now, 2 things. Whoever's on the bank statements does need to be on the loan if you're using personal bank statements, because let's say that other person's not on the loan. We don't know in underwriting that all of that income's not coming from the other person. So that one is a guideline necessity. Now, let's say that other person is a W-2 borrower. We can actually do a bank statement W-2 hybrid loan where we calculate that bank statement income, and like I said, you have that number, 11,400, whatever it is, plus, let's say it's a husband or wife's W-2, we can add that on top of it to increase that income. No problem at all.
Great. So, Randy, got a question here from Steve. Never mind, Steve, we answered already. Do we do construction loans? Unfortunately, we do not. And Rob has asked a question, and I think we answered this earlier, but Randy, maybe just reiterate about what if a borrower has 2 separate businesses and they're both separate bank accounts, making sure there's no commingling of funds. Randy, just reiterate how we'll do that for
yeah.
Bob.
So let's talk about best practices on that, and the fact that we do that. So for an ease of process, my suggestion would be to take both sets of statements and divide them up in a zip file. for the AE, so he knows which business is what, and it will increase your approval, the time it takes to get that done twofold. So, but basically, you're going to have your ERLA, your 1003 with both businesses on it. We are going to send in each statement separately and get it calculated from our bank statement review team. And we will, as I spoke of earlier, we'll take the expense ratio out of each one separately, depending on what the accountant says. So, again, just the key is make sure there's no transfers back and forth. If there is a transfer going into the account, make sure you document it with your account executive so they know, so they can tip off the bank statement review team on what that transfer is if you want to use it.
Great, thank you, Randy. Patricia's asking a question here, Chris. Surging, going from W-2 to self-employed, 6 months self-employed. You know, Patricia, Chris is going to give you your answer here.
So we got you said a borrower who's been W-2 up until 6 months ago and then goes self-employed. Unfortunately, on the bank statement program, we're going to need 2 years of self-employment. I would immediately, though, start asking questions about other options using some of our other programs that might work also. I always go down the list of, for example, is it an investment property? And we'll get into that in a minute.
Mm-hmm. Yeah, so, yeah, that's one thing, you know, working with Angel Oak, we have a really seasoned account executives. So, you know, they're going to know the second, third, fourth, fifth level questions to ask you. So, a couple other questions here before we get away from bank statements. What's the minimum down payment for our bank statement program? Randy, you kind of touched on this earlier. And then also, what's the down payment if a bank statement borrower wanted to go investment property route? So.
Okay, so yeah, so down payment, our max LTV on that is 90%, which is 10% down. There can be a gift from a family member of 5%, but they absolutely 100% need 5% of their own funds. So I'll have to, as far as second home investor, I believe it's 85% max, and I'll have to. And I apologize on that.
I think we're at 80. I think we're at 80, Randy. I think our portfolio slide would go to 85 with that's full doc. But so okay. So Steve is asking a question here. What type of transactions are we doing these on? Like purchases, refis, cash out? You know, everyone across the country has seen, you know, appreciation. The values of their homes appreciating. So a lot of self-employed borrowers, we've seen a lot over the last 6 months to a year take cash out of their homes to reinvest in their businesses. So, so just think about that. You know, the thing I love about a cash out, you're taking 3 other people out of the equation. You're taking a seller's agent, and the buyer's agent. So just think about that as your, and one other, Chris, I don't know if you want to talk about it, delayed financing, because it's such a volatile or just a really heated market right now. Talk to people about delayed financing. We're doing a lot more of these days.
Well, we hear it every day when it comes to closing. They're like, hey, we got a cash buyer waiting in the wings, and we realize that there are a lot of cash buyers ready to roll. So our program's set up perfectly for that. We allow delayed financing. We love to see it. As long as they did the transaction within 6 months, come back to us. We can use any of our programs on that pretty much. And I can't wait to talk about how Asset Qualifier falls into that delayed financing one in a minute. I mean, that's a great tool.
Yeah, that's a great point. And really, in this hot market right now, people are looking for ways to keep that home, the home of their dreams. So it's really, really great. Hey, we're 25 minutes after the hour, so I want to make sure we respect your time of an hour. We're going to move along programs. And again, still continue to put your questions in, and if we don't get them, if we have time at the end, we'll answer them. If we don't, we will definitely get your account executive to reach out to you. And I want to remind everyone, this is being recorded, and we will get this out to you before end of day tomorrow. So let's talk about, Randy, let's give a high-level overview of our Platinum Jumbo program.
Great. So your Platinum Jumbo is going to be basically your conforming fallout product. Our credit scores are going to start at 660. The LTV will also go up to 95. Again, that's at the, again, over the 80%, where in conforming you're paying MI. There's no MI on any of our products. So 660 credit score up to 90% LTV, 5% can be gifted, so 5% minimum loan funds. We will go up to $3 million on that with a minimum loan amount of $250,000. We're a little bit better than the conforming foreclosure bankruptcy, and that is 4 years, which is pretty key, especially when you're looking at that jumbo loan. To kind of reiterate on the bankruptcy, the Chapter 13, we're going to use file date, not discharge date. So that could get you, it could be discharged 6 months ago on a 13, but if it was filed 4 years ago, you're good to go on this program. Owner-occupied, second homes, and non-owner occupied, purchase, cash out, and rate and term. To touch on that a touch, we do not consider debt consolidation cash out.
Nice point.
So if you want to do there's obviously a little bit of a bump and an LTV bump on cash out. So you can call it a rate and term refinance and pay off every credit card they have, and as long as you keep it $2,000 or less, we're good to go. Chris hit on the 40-year interest only earlier, so I won't smash on that too much, but it's obviously an option on this, and we have a 1-year tax return. So what I find is people say, Randy, what's this is basically competing against conforming. So things that you're going to run against on conforming that we can do, they can't. So maximum loan amount, this goes to $3 million. You're on some of the conforming stuff, they're going to max you at whatever the amount is. No findings. You're not following a square peg, square hole. So if there's something a little bit out of the box, as John said, we're vertically integrated. We're going to try to find a way to make that loan. No MI. And lastly, turn times. You get tied up into a conforming turn time. It could be 60 days 45 to 60 days before you get an approval, depending on, who the lender is. Right now, we're running about 3 days on an initial underwrite and 3 days on a resub. So, a lot of times by the time you calculate an over 80% LTV, by the time you factor in MI on that stuff, the payment's very, very close. And if you can close a loan in 30 days as opposed to 60, it may be an option for you. So,
yeah, Randy. So Randy, it's definitely closing on those and meeting those contract dates. Is really important. It's more important right now because Chris said it earlier. There's multiple offers, and so I want to answer. I know, Mike. I know we answered your question in the box here. So, but I want to ask. I want to bring it up again. So when we mentioned delayed financing, a lot of people are under these contract dates where they've got to meet, or this one, the seller saying, nope, I've got 2 other people. One's $20,000 over what you were paying, or I've got the next person $10,000. It's an all cash deal. So what we allow you to do is if you have cash to buy that house, right, or you borrow, you get a bridge loan, or you have family members that are lending you that money, we have the capability to pay you back that money that you borrowed from either family member or from yourself. So just think of that. Talk to your AE. They will talk you through that, especially if you're under the gun for a contract date. We can definitely help you out there. So,
John, can I add something quickly that I didn't add in?
Yeah.
So debt to income is another positive for the Platinum Jumbo. So I'm sorry I missed that. 40% on the front, 50% on the back. That is also going to save you a couple deals along the way. So my apologies. That should have been one of the first things.
Yeah, no, that's we had a couple of questions from a guy named John there. That was a question about DTI on this one also. So Randy, thank you for answering that for John. Appreciate it. And guys, we will do non-warrantable condos on all of our programs. So just keep that in mind as people are looking for anything to buy from real estate, from single family to duplexes. We will go up to 4 units also. So just remember that. So Chris, I think we've got you up to talk about our other full doc program, Portfolio Select.
All right, Portfolio Select is this is has some allowances in it. It allows you to take care of some borrowers that normally you wouldn't think you could. So the entry level score for Portfolio Select is a 620 score. Like I said, it allows for a little bit of dinged up credit. You can have a mortgage late. You can have collections and charge-offs as long as they're paid before closing. Those are fine. You're looking at a seasoning requirement from bankruptcy of 24 months. And Randy talked about this a minute ago on Chapter 13. We're actually going off the filing date for seasoning for that 2 years. So you could have filed that 2 years ago and finished it up, 2 months ago, and we're okay with that. And now here's a change that came out just last week. This is a new matrix that our president of credit risk really put together, and that allows for, and to me this is huge because this gets you back into some pretty deep dinged up credit. 12-month seasoning from short sale, foreclosure, or deed in lieu. Now, most everybody out there is 2, 3 years, maybe even 4 years on some programs. We're at 12 months, so please remember that one, write that one down, and when you bump into that one, give your Angel Oak AE a call for that.
Yeah, because a lot of people have been affected during this pandemic, so we don't know what's happened to them and their credit. So we talk about it internally. We call it our waterfall of programs. So you could have had a person doing a platinum program, and then you find out they had a foreclosure. We still have a program for that borrower, and it's our Portfolio Select. We have a lot of strong partners. Chris and Randy have them too, who think of this loan as a 2-for-1, right? So you've got someone who wants to get back into home ownership, who maybe had that credit event in their life, and then as that credit event gets further and further in their rear view mirror, you're converting them to a conventional road down the road. So don't say no. Just say, hey, call your local account executive. They can help you close that loan, and then in the future you'll get another loan closed out of that. So. Yeah, and it's kind of funny, Chris, you're like, oh my God, we just lowered this last week to 12 months, right? So that's another reason why coming to our website and really getting to know your account executive is extremely important, because we've had 28 enhancements in a year. That's 28 enhancements. So they're rolling, we're averaging 2 a month. So that's why you really, really need to stay in touch with your account executive. So that's great information. Thanks, Chris. Thanks, Randy. Let's move on. We've got, really, this program's getting a lot of play here. And Randy, we're going to let you cover our investor cash flow, or otherwise known as debt service coverage program.
Absolutely. So everyone, personally, I do probably the majority, probably close to half of my loans are bank statements. Personally, I enjoy the investor cash flow. It's an absolutely awesome loan that you could get done with not a lot of headaches, not a lot of bumps and bruises. It's a very, very smooth loan that will close as fast as any of them. So the investor cash flow loan will start at a 640 loan, and will go up to an 80% LTV. So it's obviously not an owner-occupied home. They need to own their current residence for 2 years to be eligible for this program. So our minimum loan amount is $75,000, and we'll go to $1.5 million on this. Our exposure. So I'm gonna flip down a little bit and go a little bit out of order. Max number of properties. There is no limit on the number of properties that the borrower can own. I know that's a thing out there, so there's no max on that. The exposure that Angel Oak will take is 5 properties, so we'll do up to 5 of them, but they can own as many as they want. How we qualify this? They could be unemployed, they could be retired. We qualify this strictly based on the debt service coverage of the loan. So how do we get that? 2 ways. you order the appraisal. When you order the appraisal, we're going to ask for the rent schedule per the appraiser. If that amount comes in at 100% of PITI, your loan's approved, signed, sealed, delivered, it qualifies income-wise. Your account executive will do a credit analysis to make sure it qualifies for credit, but the income piece of it is 100% of PITI. You are covered up to 80% done. Caveat to that, you had a renter in there for 2 years. Appraiser puts on there that rents that area is $1,000. You've got a lease for 2 years, and it says it's $1,200. You got a couple canceled checks. We'll go outside of that. And we'll look at that because we are a non-QM company. So don't panic on that. The second portion of that is, if you see the third line bullet point down, no DSCR needed with a 700 score and max 75% LTV. So worst case scenario, you got a 700 score, drop your LTV 5%, wash your hands, and you move on. These loans, if they credit qualify, are very, very, very hard to go off the rails. So I'm in Cleveland. We have a lot of sports teams here. We just see a lot of just investors or athletes just coming in wanting to secure their future. They're focusing on this. We'll have sports players come in and do 5 loans with us, and they close them. So I digress. So my apologies. So properties can be in.
Not a problem. I'll throw a couple of questions over to Chris.
Okay.
So I think you might have said, Randy, there's no limit on the amount of properties that the investor can own. Did you say that? All right, Chris, talk about it. People ask about LLCs. Share a little bit about the LLC on this program.
We do allow the investor cash flow loan to be closed in an LLC. It needs to be no more than 2 people. The LLC needs to be for the purposes of real estate transactions. But it's very easy. You still personally qualify, and the only difference is at closing, you close it in an LLC. This loan is the easiest loan out there.
Yeah, so I want to share with everyone, and if everyone on this call is, you're probably already aware of this. But the FHFA is limiting the amount of second home and investment properties you can have as part of your portfolio. They're capping that at 7%. And what we're hearing across the industry is most people have about 11 or 12% of their portfolio consists of investment properties. So Fannie Mae, Freddie Mac, if you haven't already noticed it, probably in the last 60 to 90 days, they're making that QM box a little smaller. So guess what? Your non-QM box has to get bigger. So really, it's important to really know this program. This program, I think, has grown from almost 35% of our portfolio to almost 45. I know Randy's mentioned he's doing a lot of these loans right now. So it's really important. I mean, if you have that investor, why go get a foot and a half of tax returns and 15 lease agreements when you can just qualify this borrower on that subject property, as Randy mentioned, with the debt service coverage ratio. So, and I said this earlier, we talk about 30% of the loans we close don't meet our guidelines. I have an account executive for us. She works in Florida. She was able to get 10 deals done on this program for this borrower, and they were all cash outs, so that investor could go out and purchase some more investment properties. So really think about outside the box and really use this tool to get in front of your referral sources. It's a great program. Chris, anything else to add to this? Randy, anything else to add to this? Anything that you closed that was unique or? Oh, I got a question here. How many units will we go up to?
4.
Great. Thank you, guys. And someone asked about rates. We're gonna show you a great tool here in about 5 minutes that will answer all your questions regarding rates and is available 24/7 when Chris and Randy decide to call it a day. So this is a great program. Just really think about putting this in your toolbox. Got a little feedback there. Sorry about that. All right, let's go on and talk, let Chris talk about asset qualifier. I know you were kind of geeked up for this, so Chris, give us a little bit about asset qualifier.
I absolutely love this product. Some people are like, I don't see it much, but I think it's a super good program to go out and market and to utilize in so many ways. For example, let's say you have a delayed financing borrower. They bought the house a month or two ago. Well, clearly they had the money to pay cash for that house, okay? So if they want to get that money back, asset qualifier is a really good way to go. How does the asset qualifier work? Well, people sometimes say the word subprime associated with non-QM. I would call this an above prime program, and here's why. You're required to have a 700 credit score, that's up there, and a 25% down payment. Now, 25% down payment with someone who's got enough cash to buy a house is not an issue at all. I like to joke around and say, how do you market this thing? And it does not require employment, does not require DTI, but what it does require is enough, let's just call it money in the bank. That could be mutual funds, stocks, bonds, 401k, IRA, whatever the borrower may have. But it requires enough money in the bank to pay the mortgage off completely, plus 60 months of all other monthly debt. So let's say that all other monthly debt is $2,000 a month for your car and credit card. So let's say they want to buy a $500,000 house. They've got $2,000 in other monthly credit charges. So 2,000 times 60 is 120. So take your 500,000 plus your 120. If you have 100 or 620,000 in the bank, bam, off to closing. You're done. That's it. No DTI, no employment. And this is an awesome product for retirees. Imagine a guy going into their wealth manager, and this is a good person to market this to. All you have to do is go in one time with one of our customizable flyers and your business card and ask the wealth manager the following question. Hey, have you ever had anybody walk in here and withdraw $800,000 to pay cash for a house because they don't have a job and they can't qualify, traditionally, Fannie Freddie, and they don't have a job because they don't need a job. They're sitting on $3 or $4 million in the bank with you. And here's the kill question. You look at them and go, and they're ignoring you, eating donuts and looking at their computer. And you say, did you used to get paid a commission on that asset management? And all of a sudden they turn around and go, wait, what did you say? You hand them your flyer, hand them your card, say the next time one of your wealthy clients comes in here and wants to withdraw that money, you have them call me. They're going to truly benefit because you're making them 10% on their money in the stock market. Our rates on this program, think about it, you're looking at a 700 credit score with 25% down. You're looking at rates on this program in the 4s and 5s. So you got at least a 5% profit margin between what the stock market makes and what this loan costs you. And now you go recruit every asset manager in your county or state. And when that guy walks in the door, you're getting a phone call. And guess what? That's a jumbo. That's a big paycheck. It's a great way to market and a super easy program.
Yeah, Chris, and that's the one thing that your Angel Oak account executive will bring to the table for you. Definitely share ways that you can grow your business out the traditional way of just walking in and saying, I've got great rates and I've got great service. So, and we're going to get into that a little bit more here in a couple minutes. We have an account executive up in the Northwest. She was saying, and it's a high tech environment up there. Well, you have companies that are getting sold and bought. And maybe they have a non-compete. She talks about this program up there all the time because she said they're not working. They can't work because they sold their company. This is a great product for that borrower. Also, you have maybe someone who unfortunately the marriage dissolved, but one of the spouses got a large payout. This is a way for that person to purchase a property and get on with their life. So just think about things like that when it comes to marketing. It's just this asset qualifier alone, and I think you can really look like Chris said. You could really start a good relationship with a different referral source here. So we talked about Samantha. You talked about rates for that investor cash flow. So we're going to go to one of the great tools we have. You can access it from anywhere on the website because it's in our top banner up here. It's called the non-QM Quick Quote. And Randy, I'm going to have you give me a couple scenarios here and then we can show people pricing, and then we can talk about, hey, how they get paid, right?
Great. So, I'll run two scenarios. I'll run my two favorite programs, bank statement, and I'll run an investor cash flow.
Here you go.
So let's run our average loan amount. Yeah, 750 grand. That sounds good. Let's go 720 score. Let's go. I want to show you something with LTV. So go to 75% LTV because I want to show you the system. It's pretty cool. So we're going to do a purchase. We're going to do a 12-month bank statement. And then there we go. So if you slide down, you're going to see it's going to give you your LTVs requested. It's going to give you the rate for that 4.375, 30-year fixed, no prepay. You can go back up if you want to switch it. Go ahead and switch it, John, if you want to switch it to 24
Yeah, I'm going to just show
statement.
another little quick thing. You know, as we mentioned, the 8th difference if you give us 24. So that's a great, yeah, go ahead, Randy. Give me the other one.
So yeah, but if you notice there, it gives you your max LTV, so it's dummy proof. So let's go 150 grand on investor cash flow. Let's go 700 score. Oh yeah, that's fine. 70. Yep, that's fine. You can do that. 700. And then so you're going to do a purchase. So instead of the income doc, you're going to go DSCR investor cash flow, and you're going to change your occupancy to investor.
So Samantha, hopefully we're answering your question here. The 75% LTV, you got a rate of 5%. And it gives you some other high-level information regarding the program. So, and then Randy, if you just want to touch on lender-paid comp versus maybe borrower-paid, just so we can talk about how they're going to get paid on closing these deals.
Absolutely. So when you get a quick qual or pre-qual on this, it's going to be the base rate for borrower-paid comp because we don't make you, our competitors make you get a login. You got to go through 4 steps. We want it quick and easy. This takes about 60 seconds for you to run a scenario. However, what that takes away is us knowing what your lender paid comp setup is. So we're going to give you the base rate for borrower paid comp. Once we pre-qual the deal, we will send it back to you with absolutely every pricing option. There's usually somewhere between 12 and 18, depending on, borrower paid, lender paid, and what degree that is of pricing. So, but this is going to be borrow paid for you, and your AE will show you how to price it after the pre-qual comes out.
Yeah, and Samantha, thank you for you loving the quick qual. We love that you love the quick qual. Yeah, it's available 24/7. Randy and Chris might only be available 23/7. So, and you can run this, and all the rates quoted here are 30-year fixed. So I just want to make sure everyone's aware that we're getting close to 10 minutes before the hour. We want to show you a bunch of other great tools that we have available. But here, like Randy mentioned, you don't need login credentials to get to the quick quote. But here you do need login credentials to get to our marketing portal and where you'll also go submit your loans.
Once you log in, and logging in is very easy. It's your email address. Got it. Here we go. But it's really one thing you want to do when you start talking to an AE though is fill out a user ID request form. We'll have it back to you in a couple of hours, and it allows you access to what John's plugging into right there, and it's simply your email address. And if you've ever had one with us and you forgot your password, just click on forgot password and they'll send you a new one. But John, back to you on how to do these magical things you're about to do.
Yeah, so this is the most exciting part of our website because this is really Angel Oak, and I heard one of my account executives this morning, she used this expression and I love it. It's how Angel Oak is invested in your future. And our marketing department has done this, and they're invested in your future. So we have about a half a dozen things that you can use to help market yourself, like marketing flyers, right? This is all done for you. You can see we have them for every program. Chris mentioned it earlier about flyers. We even made them for CPAs. You don't even have to do anything else. And if you fill it out once, it fills it out for all the flyers we have. So this one would be directed towards a CPA. Another one would be directed just as a bank statement program or an investment property program. So these are all done for you. You just have to put your personal information in there and your logo. It doesn't say anything about Angel Oak, and that's one of the ways you can market yourself. We also have social media posts. Again, done all for you on your behalf. We have it driven towards realtors or borrowers for every program we have. Cash out refis for transactions, investor cash flow, just missed. Everything is here. And I think the most powerful one that we have, and I know, Chris, you do a lot of these and you do a lot of these well. I'm going to let you talk about this.
Which one? I use them all.
I'll tell you
I really do.
Presentation.
Realtor presentation. It's funny. If you guys want an immediate loan application, get 10 realtors in a room and talk about the bank statement or 1099 program. And one of those 10, this happens to me every time I do it. It's a 10% success rate. You start talking about the bank statement loan or 1099 to a group of realtors, and when it's over, one will walk up to you and go, "Hey, I work from home. I write off my car, my phone, my home office. I show nothing. Can you do that loan for me?" And you go, "Well, yeah, sure. Let's get a loan application for your credit and send it to Angel Oak." So I love that. And the loan officers are kind of shocked too. They're like, "Wow, I got, depending on how many people, you might get 10 apps if you got 100 people in the room." But those, I joke around and say a lot of this job for both of us, loan officers and AEs both, is like being a missionary. You have to go out and spread the good word and let people know that bank statement loans exist. John's original poll, 75% of the people have never done one. I'm just like, holy moly, that's wild, because all realtors are probably writing everything they can off, and that's a great chunk of customers for you right there, plus their customers. So it's like Field of Dreams. If you build it, they will come. If you advertise to self-employed people, they will come. Put it on your radio show, put it on your billboard, your internet website. Just put self-employed buyer specialist. They will come running to you. Now, you don't have to be the specialist. Your Angel Oak AE will do that for you, but you can say you are, and we're 23/7. Like John said, we're on the phone and waiting for your phone call to help you through it.
Yeah, Chris, I mean, and I can tell how passionate about this you are, because Chris does a lot of these. And as we're getting back out in front of your referral sources, grab your local account executive or get your account executive on a Zoom call with you. They will present this on your behalf. This PowerPoint presentation doesn't say anything about Angel Oak. Like our flyers, you can brand this your own. And I've got account executives that work with me. There's not, like Chris said, there's not a presentation that they do on your behalf that you won't get a loan on. And we won't say anything about Angel Oak. This is a powerful presentation. And I missed a couple of other statistics. Refis are going down. Mortgage Bankers Association saying 46%. So if you just got done with your taxes, you're probably looking at a third less income. Work with your local account executive. Let them help you grow your business. Another statistic I heard in 2020, the business applications were up 20%. So this segment of our economy is continuing to grow. So get on there, get to learn these programs, and learn to get them before your competition's going to do them. These loans get done. So if you're choosing, obviously you're on this call, so I applaud you for that. But these loans are going to get done. These borrowers are so persistent, they're going to find someone who's going to close their loan for them. So we're getting close to the top of the hour. I want to thank Chris. I want to thank Randy. Any last parting words, please?
You just touched on one thing I want to tell everybody on this call is we've got a great marketing guy, Stephen Winokur, and Angel Oak AEs get delivered leads like almost daily, where people reach out and Google bank statement loans, and it goes right to Angel Oak. So one of my favorite things is giving out the birthday present gift to, the guy I was just on the phone with. Hey, I've got a $450,000 bank statement loan. Would you like to do it? And they're like, well, yeah, thank you. So that's just another cool benefit of doing business with Angel Oak. We're constantly getting free leads. I mean, and we'll qualify them. The AEs will call out to that borrower and go, hey, what do you think your credit score is? And go through the same things you guys would go through. And then we hand over a qualified lead for free just for doing business with us. I just wanted to bring that up.
That's a great point, Chris. Thank you for doing that. Randy, any parting words here?
No, the only thing I would say is we have a great team of professionals from top to bottom that are seasoned and willing and ready to help you, figure out the non-Q market if you have not used it yet. So we welcome talking to you.
Yeah, not only behind your great account executives out there, we're about 75 strong account executives, equally strong ops people, great underwriters, great account managers. If you're going to step into this non-QM market, contact us. We'll get you in touch with your account executive. And for everyone on this call, we thank you for your time today. And again, this was recorded. We'll get this out to you before end of day tomorrow. And thank you for your participation, and have a great rest of 2021. Thank you, everyone.
Thank you all.